Markets soaring to record highs today after new inflation data showing a softer reading. Coming up on Business Matters. Good afternoon, and thank you so much for being here with me. I'm your host, Don Ma. We're starting off with Wall Street. The benchmark S&P 500 and the NASDAQ both notched record closes today, with both advancing more than 1% here. And guess what the reason is? The consumer price index. Markets seem to really like that. The inflation numbers looked softer. Retail sales as well came in today, softer as well. Stocks have rallied so far this year on first quarter earnings and expectations of the Fed eventually transitioning to cutting interest rates. And let's just take a quick look here. S&P 500 gaining 61 points, up 1%, and others also gaining as well. So let's talk more about inflation here. It appears to be resuming its downward trend as consumer prices in the U.S. increased less than expected last month. So the consumer price index rose 0.3% last month. Now, on a year-over-year basis, inflation rose 3.4% in April, also lower than the previous month's reading. And this is all according to data from the Labor Department's Bureau of Labor Statistics. So, after 3 elevated readings of this year, this is actually the first slowdown of 2024. Food prices were unchanged, supermarket prices fell, but the cost of shelter went up for a third straight month, and gasoline prices shot up nearly 3%. Now, these two categories contributed to the majority of the increase in the CPI this time, and the lower inflation print has boosted financial market expectations that an interest rate cut could come in September. And staying on inflation here, higher prices for gas have pulled spending away from other goods. So last month, U.S. retail spending, we also got that today, unexpectedly flat. So according to the Commerce Department's Census Bureau, sales rose just 3% here year on year in April. Consumers are focusing their spending on essentials and cutting back on luxuries. Retail sales actually fell last month when you take out items including cars, gas, building materials, and food services. As we told you before, consumers have been racking up debt to pay for their everyday needs, and it appears their finances are still being crushed. New data is showing household debt and delinquencies grew across all age groups in the first quarter. This is according to a report by the Federal Reserve Bank of New York. And this report revealed that the percentage of credit card balances in serious delinquency climbed to its highest level since 2012. So serious delinquency, for your information, is when someone is 90 days or more late on payments. Overall, household debt grew to nearly $18 trillion in the first quarter. Higher balances were partially attributed to population growth, as well as an increase in online spending and the increased cost of new and used cars. Though it's not just consumers here. Companies around the world also having trouble paying their debt. The number of global monthly corporate defaults is reaching high levels, very high at that. So should we be worried? To tell us more about this is Nicole Serino, Credit Research Director at S&P Global Ratings. Here's what she said. Nicole, thank you very much for your time today, this afternoon. So S&P Global Ratings came out with a report talking about global defaults here. Apparently, a 4-year high in April. Please tell us more about that.
Sure. Well, thanks, Don, for having me today. I'm really glad I could join you. Global defaults in April increased to 18 on a monthly basis, which is the highest monthly tally we've actually seen since October 2020. And that brings our year-to-date tally to 55, which is elevated as it's higher than both its 5-year and 10-year averages, but in line with what we've seen at this point in 2023. So really the story is we are still seeing this elevated number of defaults come in, which is a clear indicator for us that these lower rated, higher leverage companies are really struggling right now to meet their debt obligations.
Of course, I have to ask you, which sectors here are seeing the most defaults?
Yeah, great question. So the consumer product sector contributed to 4 of the 18 defaults in April, while another 3 came from our media and entertainment sector. These are sectors that also lead overall defaults in 2024. So this is something we've seen in 2024 so far, and we saw as well in 2023. And this really has to do with subdued consumer demand, which remains a key challenge for issuers in these sectors. And then in addition, you still have extremely tight labor markets. So many consumer-facing businesses' margins face pressure from higher wages. And so we're also seeing higher defaults from the US healthcare sector, given that many issuers are continuing to deal with higher labor costs in the sector, as well as negative cash flow and high proportions of issuers rated CCC+ and below.
So we're talking about global defaults here. Then which countries led those defaults?
Sure, yeah. So regionally, we saw in April that all regions actually experienced that increase in the tally from March. The US had the most defaults in April. It also leads year to date. But default in the US is actually not the region that's driving overall defaults right now, which I think is a really interesting story. And what I mean by that is that Europe, we are actually seeing a higher level of defaults compared to previous years, where defaults in the region are currently at their highest level since 2008. So regionally, yes, most defaults are from the US, but that is, the usual case. So really what we're focused on right now is this higher number of defaults in Europe.
All right, just one more thing here, Nicole, and I want to try, if possible, ending on a more positive note. So I'm going to ask you any silver lining in all this.
Yeah, so I think the silver lining really, Don, is that default rates are elevated. We've been talking about that for a while. We don't necessarily see them coming down in the short term, but towards the beginning of next year, we could see default rates coming down. So if the silver lining is that we are elevated, but we shouldn't see default rates higher than we saw in 2023, as defaults are kind of keeping in line with our 2023 numbers.
Well, all right, Nicole, thank you very much for your time today.
Yes, thank you, Don. Thanks for having me.
All right, moving on from that, TikTok. A group of creators is suing the federal government over the new law that orders the popular app to be sold or banned here in the US. Now, the group claims that this law will keep them from creating and sharing expressive material, as well as viewing content from other users. So the suit calls the law unconstitutionally overbroad, and says that if it's not overturned, it's going to inflict, quote, immediate and irreparable harm. It marks the second lawsuit, actually, against the government over the potential ban, driven by security concerns about TikTok's China-based parent company, ByteDance. Now, lawmakers supporting the new law argue that it is to prevent the Chinese Communist Party from accessing U.S. consumer data and potentially influencing Americans. All right. So what could be the way out for TikTok, right? I mean, one option is just to avoid being banned is to be sold to an American company. And we do have some bidders, in fact, including former Treasury Secretary Steve Mnuchin. Also just happening today, entrepreneur and former LA Dodgers owner Frank McCourt said today that he wants to buy TikTok as well. His organization is called Project Liberty. The organization is working with some other entities, including investment bank Guggenheim, big name law firm, Kirkland Ellis, among others. They propose to migrate TikTok over to an open source protocol. All right, OpenAI also in the news today, and its chief scientist and co-founder, who played an instrumental role in CEO Sam Altman's short-lived exit from OpenAI in November, announced that he was leaving the company. Let's go to NTD Sean Marshall now for the details.
OpenAI co-founder and chief scientist Ilya Sutskever is leaving the startup. He posted on social media saying, "After almost a decade, I have made the decision to leave OpenAI. I'm excited for what comes next." The announcement comes one day after OpenAI unveiled its latest artificial intelligence model, GPT-4o. And after Sutskever voicing concerns previously that Altman had pushed AI technology too far, too fast.
I think there's a lot of pressure behind the scenes. There's a lot of drama, and the culture shift that's happening at OpenAI right now is causing a huge mess. And I think that the employees are really feeling that right now.
Sutskever made headlines nearly 6 months ago when he voted to remove Altman as chief executive and chairman of the board. Jakub Pashoki will be the company's new chief scientist, the company said on its blog. Elon Musk himself once said in an interview that Ilya Sutskever was the linchpin of OpenAI's success. Musk attempted to recruit him from Google.
With AI, the AI space evolving so fast, I think that these people are wondering, what else can I do in this space to really get that sense of gratification or pursue their career path forward without having to deal with all the drama and pressure that's happening behind the scenes? And I think that Ilya's departure just kind of signals to that.
Sutskever said he is working on a new project that is very personally meaningful to me, about which I will share details in due time. Sean Marshall, NTD News.
Okay, and here's something else today. Federal legislation governing artificial intelligence is another step closer to reality. Today, Senate Majority Leader Chuck Schumer and a bipartisan group of senators announced a sweeping blueprint for addressing AI. Now, this 31-page roadmap calls for billions of dollars in government spending to accelerate AI research and development. As well, it also instructs Senate committees to develop guardrails to address some of the biggest risks in AI. For example, like AI-enabled discrimination, as well as job displacement and election interference. This roadmap also includes proposals to create a national data privacy law that would give consumers more control over their personal information and help regulate how AI companies use the data. All right, just taking a short break now, but coming up after, Jamie Dimon says that Beijing, not the enemy of the Western world, and the US is doing the right thing by fully engaging with the country. And childcare costs at least twice as much as rent if you live in certain states in the US. We'll tell you which ones after the break, so don't go away. All right, welcome back. Let me just give you some quick updates on what else is happening today. President Joe Biden and former President Donald Trump have agreed to go head-to-head in 2 scheduled debates. And the first is set for June 27th on CNN at their Atlanta, Georgia studios. The second one is scheduled for September 10th with ABC News. And this comes on the heels of a recent poll showing that Trump is leading Biden in 5 key swing states. And as well, the House has just passed a bill that renews authority for the Federal Aviation Administration today. The measure includes provisions that require airlines to give cash refunds to passengers when flights are canceled. Also requires the installation of runway technology at many airports that can prevent airplane collisions. The bill has passed the Senate. Now it just needs President Biden's signature to become law. A 2-day rally in meme stocks has lost momentum here. AMC shares slumped after surging 135% in the past 2 sessions. GameStop stocks also tumbling. The rally was sparked by the return of online persona Roaring Kitty Keith Gill, who was central in a 2021 GameStop selling frenzy. Netflix scoring touchdowns. The streaming service announced a 3-year partnership with the National Football League to broadcast the Christmas Day games live. This year, Netflix will air 2 holiday games on December 25th. All right, some China-related stories here. JP Morgan's CEO favors full engagement with China. And this is coming as tensions has picked up with new tariffs announced yesterday. We covered that. So during an interview with Australia's Sky News, Jamie Dimon says the U.S. government has the right to protect itself if it thinks that there is unfair trade practices happening. He added that Beijing is a fierce competitor, but he wouldn't classify it as an enemy. Take a listen.
I think the American government is doing the right thing to fully engage. That doesn't mean the Chinese are going to like everything we do, just like we don't like everything they do. But it doesn't have to be war. It could be tough competition, and we should be prepared for that.
Dimon's comments come a day after President Joe Biden unveiled steep increases on tariffs on an array of Chinese imports. China has vowed retaliation. So the head of the biggest U.S. bank here also noted that conflict will remain and depending on how Taiwan is resolved and as long as China continues to side with Russia. As well, the House is getting closer to pass a new bill that would ban Chinese biotech companies on the grounds of national security. So the House Committee on Oversight and Accountability voted overwhelmingly to approve the so-called Biosecure Act. It would restrict business with China's BGI, Wuxi AppTec, and other biotech companies. BGI collects genetic data of Americans and has previously been seen called a Chinese military company operating in the U.S. by the Pentagon. It would also push U.S. pharmaceutical and healthcare companies to reduce their reliance on Chinese research and manufacturing. This bill now must get through the full House and Senate before President Joe Biden could sign it into law. YouTube complying with censorship orders in Hong Kong. A court recently banned a protest song called Glory to Hong Kong at Beijing's request. Now, YouTube has said it will follow through and block access. So what we're talking about here is that the videos of the song on YouTube will show that this content is restricted in your country or region based on local law if you're in the Hong Kong area. YouTube also said that links to the video will no longer show up on Google search in Hong Kong. The company said that it's disappointed by the court's decision and will consider options for an appeal. So the song is being censored is considered an unofficial anthem for many pro-democracy people in Hong Kong. And critics are saying that the ban is a blow to the freedoms in the financial hub amid Beijing's tightened control. Okay, moving on from China, and we're talking about childcare. If you think the rent is high, wait until you need to pay for childcare because costs continue to be a major financial burden for parents. If you have 2 kids and live in one of 11 states in the US or Washington, D.C., childcare costs are at least twice as much as rent. And some of those states are Massachusetts, Minnesota, Vermont, Rhode Island, and Wisconsin, among others. This is according to a new report today from a nonprofit called Child Care Aware. It works a nationwide network of childcare providers. Now, in every other state in the U.S. besides those 11, placing 2 kids in child care center costs at least as much as a quarter more than the average rent. Now, the report looked at child care for an infant and 4-year-olds. Nationwide, the average annual cost for child care rose to nearly $11,600 per child last year. And interest rates on new federal student loans is expected to hit a 12-year high. And this is upcoming 2024-2025 academic college years. The interest rates for undergraduate student loans will rise above 6.5%. That's up from 5.5% for the current year. The federal student loan interest rate has not been that high since the 2012 to 2013 school year. Both graduate students and Federal Plus loan recipients will also see an interest rate hike this school year. The Biden administration has been working to cancel student loans for certain groups of borrowers. So far, nearly $160 billion in federal student loan debt has been canceled. FTC Chair Lina Khan in the hot seat today as well. Lawmakers questioning her over the agency's crackdown on big merger deals. NTD's Virginia Gibson has a recap on the hearing.
FTC Chair Lina Khan in the hot seat Wednesday, grilled by members of the House Appropriations Committee over her aggressive merger takedowns. She's brought over 60 enforcement actions and has successfully ended 19, the highest number of FTC enforcement actions since 2001.
Over the last 40 years, we've seen huge amounts of consolidation that has resulted in a more centralized economy. Right? I mean, one of the contributors of America's economic success has been open, competitive markets.
Khan says consolidation will set the American economy back. Prominent shutdowns include NVIDIA's wish to acquire British semiconductor firm ARM. Khan says it would have been the biggest semiconductor merger in history. Biotech firm Illumina's wish to acquire cancer screening firm Grail, and Lockheed Martin's desire to acquire aerospace firm Aerojet, which may have eliminated America's only independent supplier of key missile propulsion inputs.
I think we had been living in an environment where we had too little deterrence. And so there were deals being proposed that were flagrantly anti-competitive. Deal makers are saying 5 years ago when we were thinking about deals, we didn't really think about antitrust risk, but now it's the first part of the conversation.
To continue the fight, Khan wants a 25% budget increase from Congress, a request that surprised Republican lawmakers.
I'm quite honestly shocked. This government cannot afford it. We're approaching any day now $35 trillion in debt.
Congressman Chuck Edwards says this would be a 52% increase compared to the 2021 budget. Khan says she wants the money to continue antitrust litigation, which she says is very expensive.
Because we have to use economic experts. And so these experts routinely are charging millions of dollars. And so as we've become more active on the antitrust side, those expenses have gone up as well.
Khan did not comment on the national debt or whether taxpayers could afford paying for bigger government. Virginia Gibson, NTD News.
Okay, we just have one more thing for you guys today, and it's about Memorial Day. Less than 2 weeks away, and more than 38 million people are expected to hit the highways. According to AAA, travel for this Memorial Day weekend will be the second highest on record since 2005. This year, more than 43 million Americans are expected to travel by plane, cruises, and public transportation. This is a 4% increase from last year and close to the previous 2005 record of 44 million travelers. AAA says the busiest times on the roads will be from noon through 7 p.m. on the Thursday and Friday before Memorial Day. All right, that's it for today. All the stories we have. Thank you very much for watching. If you have any feedback for the episode, please feel free to let me know. You can email me at business@ntd.com or leave a comment online. I do read them for every episode. Thank you very much for watching today, and see you tomorrow.